Good afternoon, everyone. Thank you for joining me today for the Alico presentation here. My name is Rich Rallo. I am the Chief Financial Officer of Alico Inc. And for those of you who are not familiar with Alico, we are one of the largest growers of citrus in the state of Florida. We have been a public company since the 1970s and are traded on NASDAQ under the symbol ALCO. Our primary asset is 75,000 acres of real estate. Of that, 49,000 of those acres is where our citrus trees sit, and the other 26,000 acres are ranch land that we currently own. We have a profitable business model led by a disciplined team, and as you can see over the last 5 years, we've averaged an adjusted EBITDA of just below 28%. Our business does have volatility, but over any long period of time, you will see that the adjusted EBITDA levels are very healthy. In looking at some of the more recent events, we did update our guidance at the end of March. This updated guidance does reflect a freeze event which happened in the state of Florida, so it impacted our groves as well as other groves. Due to the increase in consumption as well as the supply being down a little bit, we have seen an increase in the market prices. And ultimately, with some of our ranch sales, we are looking at an EBITDA of anywhere from $59 to $64 million for our fiscal year ended 2022. In June of 2021, we made a decision and increased our dividend to $2 a share, which is currently approximately a yield of 5%. Also in 2021, we actually modified a significant portion of our fixed rate debt. We modified that to where it is now interest bearing only, and that saves us cash flow of about $5 to $6 million a year, and those loans mature in 2029. At the same time, we were able to lower that interest rate and lock that in until 2029. We have also been aggressively planting more citrus trees. So since 2018, we have planted over 1.5 million trees in the ground. The benefit of this is we don't start seeing the impact of these trees until our next harvest season in 2023, as these trees take about 5 years before they start producing any meaningful fruit on those. So we put that investment in, and now hopefully going forward, we'll see the benefits of those investments. Several years ago, we announced that we were going to divest from our ranch land, and over the last couple of years we've sold 19,800 acres in 2021, and we sold an additional 8,200 acres in 2022. We're using those proceeds to certainly give that money back in the best way to our shareholders. We are focused on ESG, and we did release our first sustainability report in December of 2021. We will be issuing a revised sustainability report in December of 2022. As I mentioned, we have 75,000 acres of land. If we look at those values, the ranch land is $26,000. Management estimates that that value is anywhere between $4,500 and $5,500 an acre. The last sale, as we did announce in our press release, was for $4,500 an acre, and we continue to see interest and increases in those prices as we go along. Our citrus land, again, 49,000 acres, we believe is in the range of $8,000 to $10,000 per acre, ultimately giving us an implied enterprise value of anywhere from $509 million to $633 million. You back out your net debt, we're looking at an implied value of $400 million to $525 million. As you can see, as of 4/11, our market cap was $288,000, so certainly a little disconnect there. What have we done with those proceeds as we've sold that ranch land over the last several years? Well, we returned $154 million of capital back since 2014. We've done that in the form of dividends, and we've paid back $26.8 million in dividends since that time. That number will increase with our latest increase in dividend to $2. We've done some buybacks over the years of approximately $2.4 million. We did a tender offer back in 2018 for $25.6 million, and the biggest of those is we continued to pay down debt we've paid down over $90 million of debt since 2014. As I mentioned, we've had an increase in our dividend. Back in 2019, we were paying 24 cents on the dividend a year. We increased that in 2020 to 36 cents. Really didn't have any impact. We then turned around and increased that to 72 cents. Didn't have a significant. The board evaluated, management strategic. We decided to increase that dividend to $2 a share, which is a dividend we can support for at least the next 5 years and into the future. As we look at debt, as I mentioned, we've paid over $90 million. Back in 2015, we had significant debt because we did 2 large acquisitions of citrus groves, and we more than doubled the size of our citrus acres. But since then, we've been using the profits from our operations as well as some of the proceeds from the sale of the ranch land to continue to pay down that debt. We are targeting at the end of this fiscal year to be at $107 million, and ultimately the ultimate target is to get that down to about $85 to $90 million of debt. The company has 2 business segments. It's the citrus segment, as I mentioned. We are focused on non-from concentrate orange juice, which is the juice you buy in the stores on the shelves, the Tropicanas, the Minute Maid, the Simply. We produced 6.4 million boxes last year of fruit. And again, we are one of the largest growers in the state of Florida. Our largest client is Tropicana. I'm sure many of you are familiar with them. We are, anecdotally, the largest supplier of juice to them. They get juice from other growers in Florida, as well as they do import some juices from Brazil. The oranges within Florida are not enough to supply the demand, so they do import from Brazil some juice. We also have the Alico land management, which again is the 26,000 acres of land, which I'll talk a little bit about. At the same time, we do have 90,000 acres, approximately 90,000 acres of mineral rights. We have not aggressively monetized those and are at this point making minimal revenue from that. However, over the last 6 to 12 months with the increase in the oil prices and some other items, we are starting to see some increased activity and interest in those mineral rights. As I've mentioned, we are the growers of oranges. We have over 5 million trees planted, and we grow the oranges, and we harvest and haul those to the processor's plant. At that point, we are done, and we turn it over to the processor, who then bottles that and distributes it out to your grocers, the Krogers, Publix, and those sorts. So we are the grower who is responsible and takes care of that. A couple of things as we look at our 2022 harvest season. It has been a challenging year for us as well as the Florida industry. We had a freeze event which took place at the end of January and impacted our fruit, and therefore we anticipate we will have some down production this year. However, the good news is that it does not appear to have done any damage to our trees. So we're looking for next year to rebound nicely as we continue to move forward. As a result of production being down and consumption being up, when we are seeing a decrease in the inventory levels, which is resulting in an increase in the market price. As a result of COVID-19, non-from concentrate orange juice saw a big spike in consumption. While we are off those highest levels, we are continuing to see that consumption is strong, and so that is holding the price as well. And for the last couple of years, we've actually seen an increase in the market prices as we go through. So today, what do we look like? As you can see on the map, we're actually in 7 counties within the state of Florida, and we have approximately 28 groves within that. So we are scattered throughout Florida, as high as Polk County, going all the way down to Hendry County. So we are scattered throughout there. There are 2 varieties. There's the early and mid-season fruit, and then there's the Valencia, which is considered a late-season fruit. We harvest the early and mids from after Thanksgiving till mid-January, and then the Valencia fruit is harvested anywhere from the middle to the end of February till the end of May, beginning of June. As I mentioned, Tropicana is our largest client. We do over 90% of our business with Tropicana. They are an excellent partner, and we have been partners with them for several years as we go through. Looking at the land management side, as I've mentioned, we've been in the process of divesting that land, and we have sold over 48,000 acres of that land over the last 4 years. We still have 26,000 acres of land available. What I will say is, as a result of the real estate and what's happening in the market, we have seen significant increases in the value of our land. So today we are receiving higher prices than we have received in the past. Buyer interest continues to remain strong, and we're taking that and turning around that to evaluate what's the best way to use those funds. Not only have used those funds, as I've mentioned before, to support the pay down of debt, dividends, and the like, we also purchased some additional citrus groves in May and October of 2020. And again, to expand our footprint and at the same time take advantage of economies of scale and some personnel items that we could take advantage of and improve. On the ranch land, this year in March, we did sell 6,286 acres for $4,500 an acre. With respect to that, we did announce we are looking to pay down some additional debt with some of those proceeds as we continue to move forward. As I mentioned, we do have mineral rights scattered throughout Florida on our own land and on some land that we don't own. It is mostly oil and gas and sand and shell. Up until recently, we did not aggressively monetize that, and we had very little revenue. However, we do have someone who is leasing property and has started pumping oil and gas, and we've now had other interest in that. And at the same time, we've had interest in the shell. So while that is something that takes time to facilitate, we believe there's a possibility to generate additional revenue from that at minimal cost to us. We are in the process of obtaining the appropriate permits to allow that business to take place. We also have some other opportunities we're looking at. We entered into a 3-year option agreement to sell approximately 900 acres of our citrus property for $11,500 per acre. Of that citrus property, only 340 acres is actually citrus. The other is support land. It's got a little cane on that. So ultimately, we're looking at that as this transaction, if the option is exercised, we will have the ability to lease that back at a minimal price and continue to grow our citrus on that property while enjoying the proceeds from that. Additionally, we had an opportunity to purchase 85 acres of undeveloped land. As part of that, as a part of right of first refusal that we had entered back into in 2004, that land opportunity and looking at some of the comps near that turns out to be a very nice deal. So we are proceeding forward to obtain those acres of undeveloped land. There is now building going on in land that is adjacent to that, and moving forward, within the last 5 years, a Walmart has been built around that property. So if any of you are familiar with Florida, there is a significant amount of building going on and expansion within that. So we believe that's a great opportunity to turn that around as we continue to see growth within the state of Florida. In looking at our financial improvements, back in 2017, we announced an Alico 2.0 modernization program. We actually evaluated all aspects of our business, from our ranch land, from our costs, looking at our application strategy. At that time, we had 3 separate companies, 2 through acquisition, and the existing company that were really all running independently. So we went ahead and we consolidated that, trimmed down our systems, outsource certain things as a harvest and haul, because we only do that for 6.5 months of the year. As a result, we were able to take our costs down from $84 million to $67.7 million. Just as important, we've been able to hold that, and we continue to hold that line and continue to be stringent with that. At the same time, we have gotten into caretaking services, and we now caretake for a top 10 grower within the state of Florida. And we provide all the caretaking services, and they reimburse us every dollar that we expense, and ultimately then we make a management fee on that. Investing in the future. We are a citrus operation, and we continue to invest heavily. As I've mentioned, we've invested over 1.5 million trees in the ground since 2018. This is being done over all the same acres that we currently own, and what we're doing is increasing the density within our own acres. So ultimately, we can get greater production within our acres and a minimal cost at the same time. So we are continuing to do that. We will continue to move forward with that strategy and continue to put more trees in the ground. With respect to ESG, as I mentioned, we did issue a sustainability report in December of 2021. We have worked hard and seen an improvement within our ISS scores. Over 2021, we created a board. We do have a director in this area, and we are continuing to evaluate ways to improve in this area with respect to that topic. So we look at Alico, we say, okay, why invest in Alico? A couple of reasons. Financial performance. Pricing has recovered in citrus, has recovered. With the planting of all of our 1.5 million trees, which we'll start to see the benefit in 2023, we are going to have the potential to see increased production from that. We've generated EBITDA over the last 5 years of over $236 million and adjusted EBITDA backing out sales or any other one-time items of approximately $150 million. Today, we are covered by Roth Capital on the sell side. About 45% of our stock is institutionally owned, and our trading multiples are lower than some of our selected comparables out there today. As you know, and I shared the ranch land strategy, we've sold 48,000. We are looking to move the additional 26,000 acres at opportunistic prices. We're not looking to accept lowball pricing, and right now we've got significant interest. So we are certainly taking that into consideration as we move forward and how to use those proceeds. And as I talked about, we're looking to monetize some of those mineral rights. As I've mentioned, Tropicana is our largest customer, and we are a great partner and have been with them. As an example, when we 2 years ago had to renegotiate our contract, we actually went to all of the processors and asked for bids and quotes, and Tropicana, hands down, came in with the best. So we continued to go with them. They are a great partner. We do partner with the other processors to a much smaller extent, but our relationship has been with Tropicana. As I've mentioned, we've provided $154 million of capital returned. We're going to continue to do that strategy. We look at it, we've cleaned up our balance sheet, and our balance sheet is pretty simple. Our business model is pretty simple. It is the citrus business model. You grow in the oranges and you produce, maximize the production of your trees and move forward. With respect to our debt, we think we've done a nice job of structuring our debt. We do have about 85 million of that is fixed rate, and we have about 38 million of that which is on the variable side. We do have the ability on the variable side to pay that down without any prepayment penalties. As I've mentioned, we've fixed a majority of the fixed rate debt at an interest rate of 3.85% until 2029. Investing in growth. We are looking at technology. We currently use technology with respect to our irrigation. Our irrigation systems are automated, so they know when the ground is dry to put the water down and how much to water. We are looking actually at technology as it relates to drones and evaluating. While we're in the early stages and we've done some pilots, there's certainly some research in that area going on from that perspective. We're continuing to maximize the density of our groves so we can maximize the production of our citrus. We're piloting alternative crops. We've looked at hemp, we've looked at bamboo, pangamia, all of those items. We're continuing to evaluate to see if there's another opportunity which fits within our strategy to help us grow and to be, again, a profitable producer of cash flow from that side of it. We have been in business for 120 years and been successful. We plan to take Alico into the next 120 years and continue that momentum with the current strategy that we've talked about today. At that time, I will open it up to questions. Yes.
So I just saw recently that in the last month, the company, the stock price increased by 30%. Is there one thing in particular that you attribute this to, or is there one principal thing or news that came out?
So I believe, while you can't put your finger on, I think we've done a lot of one-on-one meetings and going out, and we've also looked at our land propositions. As you saw, our land assets. A lot of the communication, I believe people are starting to see that Alico has a nice land base that supports that, and I think that would be the key, as well as having an operation that generates positive cash flow. So I think a combination of those two and the basic fundamentals is what's really led to that. Yeah.
So you mentioned about 1.5 million trees being planted in the last since 2018.
Yes.
Just to get a bit of a perspective, how many trees do you estimate that the company has? Or is 1.5 million a big percentage, or how much of a percentage increase is that year?
We have today with those trees just over 5 million trees.
So you're going from 5 to 6.5?
No, we're going from 3.5, 3.8 to 5.3. Yeah. Yeah, bigger percentage, yes.
Last question.
Yep.
How do you guys anticipate the climate change to influence your production in any particular way, positive or negative?
So it's difficult to say because we've seen hurricanes and freeze events, as we saw this year, in the past. It's really to the extent those happen. We do have crop insurance to protect us for the trees and the fruit. So I think while it's out there, and we keep our fingers crossed each year for the weather, because that impacts us significantly, I don't see how that in the near term really has a dramatic impact from that side of it. Yep. Any other questions? Just so you guys are aware, I do have a simple one-page front and back summary of the company if you guys would like to take that. And it's just some information about the company and some of the financial data, some of the strategy we've been going through. Yes? So our selling price is actually a combination of both. We enter into contracts which have collared arrangements, and they have a floor and ceiling. So if the market price falls within that, ultimately we get that market price. So last year the market price was X, this year it's X plus. We get the benefit of that because we're just now getting close to that ceiling range. So we do get that. Up until the ceiling, there is that fluctuation. With respect to cost, it's difficult. I will tell you with regard to fuel, we did hedge about 40 to 50% of our fuel capacity last year, and we locked in that at 2.25. So we did hedge fuel because we thought, seeing what was going on, we thought that was a good idea at the time. We didn't realize how good it would be from that perspective, but it is very difficult to hedge your costs with respect to the chemicals and especially fertilizer. However, we will buy certain chemicals where possible in advance and store those at the lower prices if we can achieve that.
With the rising fertilizer price, is your margin this year not higher?
So it will have some impact this year, and depending on how that goes, it potentially has an impact from that increase into next year. However, we're confident that with the additional trees and that production, that will more than offset that.
Are you able to ration the consumption of your fertilizer? Because sometimes you don't have to apply potash every year.
So we have an application strategy that we believe is the best. We have been told that our groves look and perform very well within the state of Florida. And to deviate from that, we're always looking at opportunities, but we're certainly not going to take any actions that potentially impact the trees in a negative way. All right. Thank you, everyone. I appreciate your time. And if you have any questions, I will be here for the rest of the afternoon. Thank you.